Welcome to Alpha Recap, your after-hours market rundown from stockalpha.ai. Markets closed with a heavy dose of big tech drama today, and we're unpacking it. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. So, what really stands out here is that Apple hit a headline milestone, $5 trillion in market capitalization, while some other tech names weren't so lucky.
Right. And to start, let's set the scene. Markets closed with elevated volatility driven by three big storylines: Apple's milestone, a steep drop in a core AI chip supplier, and a securities fraud class action tied to Microsoft. Those three dominated investor attention today.
The juxtaposition was wild. Apple reaching $5 trillion felt like a structural story about concentration and passive flows, while the chip name fell hard on heavy volume. Traders were scrambling between the steady giant and risk in AI exposure.
Let's dig into Apple first. The company crossed $5 trillion in midday trading, a very big milestone. That's a market cap milestone that changes how indexes and ETFs are weighted, and it increases how much attention flows to that single stock.
Exactly. When a name that big moves, it has mechanical consequences. Passive funds that track major benchmarks can end up concentrating more capital into a handful of mega caps, and that can amplify market moves when those names trade heavily.
And analysts note that any talk of rebalancing or commentary from index providers could cause pockets of flow. So even if Apple's fundamentals look one way, the index mechanics can create price impact that's more about structure than earnings.
Yeah, that tracks.
Okay, the next headline. NVIDIA dropped about 5% today, trading heavily. Roughly 153 million shares changed hands. Not a great day for that stock or the chip group.
Short reaction? Ouch. That sell-off was one of the session's largest individual moves, and it created a lot of intraday dispersion, especially between pure AI hardware plays and the rest of big tech.
Why did it matter beyond the points move? Heavy volume like that suggests elevated liquidity, meaning people could trade, but it also means bigger swings for portfolios that have concentrated positions in these names. Data suggests traders were wrestling with both fundamentals and event risk at once.
And putting these together, Apple up to $5 trillion, NVIDIA down sharply, shows you how crowded attention can be. One megacap can be headline-grabbing, while another core growth name feels the sell pressure, all in the same session.
Let's add the Microsoft angle. The company faced a securities fraud class action tied to its Copilot and cloud business, and the stock dropped about 10% on that headline. There's an August 11th deadline to join the class, which was highlighted by investor notices.
Legal overhangs like that tend to increase risk premia for names tied to cloud and AI, even if the allegations are ultimately resolved. Traders price in uncertainty, and that can ripple to suppliers and chip makers, like NVIDIA and Intel.
Intel, for example, traded down modestly, less than 1%, but with heavy volume, about 132 million shares. So that whole chip complex felt the heat, even if some moves were more dramatic than others.
Short segment, quick reactions.
Big move. Not what many expected. Switching topics a bit, corporate rationalization and governance moves also showed up in today's flow. Visa reportedly plans to cut about 7% of its staff, which is another example of cost control versus growth choices we've been tracking.
So, what really stands out here is the pattern. Cost-cutting like Visa's can boost near-term margins, but analysts note it can also change growth narratives, especially for payments firms that have been investing in platforms and new product initiatives.
You also had a board refresh at a smaller public company, Canton Strategic Holdings, which elected 3 new directors as part of a pivot towards something called the Canton Network and referenced a token called Canton Coin.
That's a governance signal to watch. When small-cap companies refresh boards, it often precedes strategic changes or capital allocation shifts. Investors look for follow-up filings to understand priorities.
And on the M&A front, A private deal was advised where MAS medical staffing was acquired by Care Career. It's a niche example, but it underscores consolidation in healthcare staffing, which has been ongoing.
Right, right. And the other thing is that those moves show two parallel forces: near-term efficiency and long-term consolidation. Companies are cutting costs and also buying or merging in sectors where scale helps margins.
Let's move to infrastructure and energy. Envision Energy and Callista Energy completed delivery of a battery energy storage system in France. A large project rated at 193 megawatts and 386 megawatt hours. That's multi-hour storage at utility scale.
That's execution. A project of that size can provide frequency response, capacity, and arbitrage opportunities. It's a tangible sign that capital spending for decarbonization and grid services is moving from planning to operational reality.
And on the compute side, AWIN, part of the Kista Group, launched servers built around AMD's EPYC 9006 series CPUs. Those are targeted at AI and general-purpose workloads, signaling further commercialization of AI infrastructure.
Demand for AI-optimized servers is a structural tailwind for parts of the supply chain. If customer adoption materializes, it supports revenue upside for server vendors and for AMD as a component supplier.
Quick reaction segment.
Infrastructure wins matter. Big picture. Okay, a few shorter items on income, retail, and quality signals. Cohen and Steers issued Section 19A notices for distributions from a couple of funds, with payments scheduled for July 31st. That creates tax characterization questions for holders.
Right. And for listeners who aren't deep into fund mechanics, a Section 19A letter typically sets expectations for whether a distribution will be ordinary income or return of capital. And that matters for taxable investors when payments land on July 31st.
Retail moved some boxes too: product rollouts and partnerships. A snack brand teamed with a well-known crayon brand for Target and Whole Foods distribution. And another product listed at Walmart and sporting retailers. Also, a supplier got a 98% quality audit score, which helps shelf confidence.
Shelf momentum can be underrated. A 98% audit? That's the kind of thing buyers like to see.
Totally. Small wins that can compound over a season, especially with back-to-school merchandising around the corner.
On regulation and alternative proteins, packaging company American Packaging flagged the spread of extended producer responsibility legislation in the U.S. That could change how packaging is designed and who pays for end-of-life recycling.
Regulatory shifts like EPR can cause companies to revisit product design and potentially pass costs through the chain. Analysts note firms that quantify readiness may gain a relative advantage if costs are meaningful.
And on food tech, projections showed the animal-free egg protein market expanding from about $237 million in 2025 to roughly $1.93 billion by 2036, driven by precision fermentation and a desire for resilience to things like avian flu.
That's a fast-growing niche. It's early, but it aligns with broader alternative protein trends. Companies with precision fermentation capabilities could become strategic partners or acquisition targets as the space scales.
Quick check. Rapid-fire numbers from today. NVIDIA was down about 5% to roughly $196, trading about 153 million shares. An ETF tied to Bitcoin futures was up about 1% to roughly $8.80. Intel was down less than 1% to about $92, with volume around 132 million shares.
Also, reminder on the funds. Section 19A distributions pay on July 31st. Envision and Callista delivered that large battery system in France. And AWIN launched AMD EPYC-based servers aimed at AI workloads.
So, what are the big takeaways from today's flow? 1. Big tech headline events drove elevated, event-driven volatility. Legal filings, milestone market caps, and operational headlines combined to create outsized dispersion.
2. Corporate cost discipline is still a theme. Visa's reported cuts and smaller M&A deals show A, an efficiency push, and B, continued consolidation in some sectors, like healthcare staffing.
3. Infrastructure and industrial deployment proceeded even amid the noise. The battery energy storage system and server launches show capital spending in energy and compute infrastructure is moving forward.
4. Regulatory and product cycles matter for long-term positioning. From EPR impacting packaging to precision fermentation shaping alternative proteins. Those are structural stories that don't disappear just because headline risk spikes.
What should listeners watch next? Follow through in AI chip names. Does today's selling broaden or does it stabilize? Any rebalancing tied to Apple's $5 trillion milestone could influence passive flows. And keep an eye on Microsoft's legal filings and any company commentary ahead of the August 11th deadline.
Also, watch Visa for statements around headcount or guidance, and AWIN partner updates to see if server demand is real. For the energy project, operational performance metrics will be telling, whether the battery performs as expected on grid services.
Final short reactions.
Lots to monitor. Elevated attention.
Honestly, I was a bit surprised by this one.
I mean, when you step back and look at this, markets are doing two things at once. Pricing short-term event risk while rotating into long-term infrastructure and AI themes.
Right. And the practical takeaway for listeners. Today's moves were informational, not directional for anyone's portfolio. Analysts note these are market dynamics and event risks to digest, not personalized advice.
Exactly. We're describing trends, not telling anyone to buy or sell securities. If you want to dig deeper into any of these items, we'll try to answer your questions.
Wrap-up takeaways. Apple's $5 trillion reshapes index mechanics. NVIDIA's roughly 5% drop highlighted AI-related volatility and heavy intraday flows. Microsoft's legal headlines added event risk with an August 11th claims deadline. And infrastructure, both energy and compute, continued to show tangible progress.
And remember those smaller but important items. Section 19A, distribution letters, due July 31st. Packaging regulation trends to watch. And the fast-growing animal-free egg market that could reshape parts of food tech.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Until next time, this was Alpha Recap.